Hey guys, it's Nathan Robert here. I have a quick warning to everyone in the stock market and why investing right now kind of sucks. I hear a lot of popular advice right now saying it's okay to buy ETFs at all-time highs. It doesn't really change the long-run results, but here's what I'm kind of worried about. And I'm going to go ahead and show you this right now. It's about SPY and QQQ. So these two ETFs specifically are market cap weighted. And what that means is the larger the market cap, the more of the ETFs it makes up. And so with Nvidia now creeping up on the largest company in the entire world, actually it was the largest company in the entire world this morning, but now it's only at 3.22 trillion, right under Microsoft. But if we go over here and look at the SPY's top holdings, the largest holding of course is Nvidia right now, which makes up 7.25% of the entire portfolio. So that means if you go and put $100 in the SPY or the S&P 500, it tracks that. So if you go and put $100 in them, $7.25 of that goes straight into Nvidia at all-time highs if you buy today. And let's look at the NASDAQ. So $8.70 would actually go into Nvidia. And here's the thing. I'm comfortable with Microsoft and Apple being 8% and 8% or even 9%, but I don't know about Nvidia because their valuation. So look at their free cash flow yield. They have a free cash flow yield of 1.22%. So even if they double their revenue from today's, which they already have a ton of revenue, net income, and free cash flow in the trailing 12 months, which I'll show you that if they double that, their free cash flow yield would be 2.44%, which isn't exactly still super attractive. Oh, and if you're a dividend investor, they do pay a dividend. Check this out, of 3%, and they have a payout ratio of 2%. So they have a lot of room to grow their dividend if you like Nvidia for that point of view. So yeah, those were kind of my thoughts. Remember, none of this is financial advice, but that's why investing right now is kind of difficult. Nvidia has really been leading to a lot of the S&P 500 and the QQQ's gains. And if you invest in the QQQ right now, $8.70 of that goes to Nvidia, and that's what I'm a little bit uncomfortable with. And here, I'll go ahead and show you my Robinhood portfolio. Hey, thanks for sticking around with me. Don't forget to drop a like on the video. It really helps me out a lot. But I own some of the Magnificent Seven. I own Google and Meta because these two companies actually trade at very fair valuation. Same for Salesforce. Actually, I'm very happy to be a Salesforce shareholder today. The company was up 4.35% today, which really helped out the portfolio's gains. So that's why we were positive on the day. 0.87%. So yeah, that was kind of my warning. I still think it's crazy that Nvidia has grown so much that it's now the largest holding in the two most popular ETFs, the NASDAQ and the S&P 500. So I got some other news I want to share with you guys. We got Chipotle. This stock is finally coming down. They are about to perform their stock split, and I guess they're falling 6%. But if we zoom out, it's kind of like not that big of a deal at all. That's kind of what I also heard about Nvidia. People were kind of worried because Nvidia fell quite a bit today, especially from their peak. They're down 3.54% today, but they also hit an all-time high today. I heard a lot of people like worrying, but if we zoom out, it's like, are we really going to worry about this right here? You know what I mean? Oh, yeah. And then some other news today, we had oil and natural gas kind of spike up because there was an article today from the Wall Street Journal I wanted to show you real quick. And they say they believe it's going to cost more to stay cool this summer. And we also had this other article right here where if we click this is like an AI summary. Basically what it says is because of the record high temperatures here in the United States, they believe that it's going to drive up the demand for natural gas prices. And here's the chart for natural gas. If we actually zoom out, natural gas has done terrible. This is the ETF that tracks it. They even had to do a stock split because it fell so much. But what I'm trying to say is natural gas probably has some room to go up and no one would really be concerned about it. So that's also bullish for my stock ticker symbol EOG, which frequently does special dividends. They actually have a rule where 60% of all free cash flow they make is going to be returned either through special dividends or stock buybacks. And they have a huge history of doing special dividends, and they haven't done any special dividends recently, and that's because this company has been doing a bunch of buybacks. They literally bought back $759 million of stock just in the most recent quarter. And if we look at the market cap, it's $70 billion. So they bought back well over 1% of the entire company just in the most recent quarter. So that's why I really like EOG Resources. If oil and natural gas demand does go up this summer, that'll be one way to benefit. You could make a play off that, hopefully get some special dividends or some stock price appreciation with EOG resources. But also, I want to talk about CRM or Salesforce today. They were up 4.31% today. The candle kind of scared me because we were really falling down here. I thought maybe we could go lower, but today really saved us, up 4.31%. And again, I want to show you why I really love this company. It's one of my largest holdings. They have a forward PE ratio of 24.77. That's cheaper than all of the Magnificent Seven, basically. And they have a dividend yield of 0.66%, and they have a ton of room to raise the dividend. Remember, their dividend costs 40 cents a quarter, and in the most recent quarter, let's see how much EPS they made. $1.55. And if we look at it on a free cash flow per share basis, they made $6.43. This is the metric that's super hard to grow, and when they do grow it, it's super impressive. And they grew it 45% year over year, the most profitable they've ever been. So let me actually show you that number visualized. So they made $6.25 billion of free cash flow, and in the trailing 12 months, they actually made more free cash flow than Coca-Cola. But anyway, just remember that $6.25 billion, and their dividend cost them just per one quarter $388 million, which is pretty cool. And if we go to the diluted weighted average shares, you actually own 0.3% more of the company. So they pay a dividend and they're spending a ton of money on stock buybacks. Look at this. They spent $1.6 billion just in the most recent quarter on stock buybacks, and they're retiring their debt. So they're paying off debt. Oh yeah, let me show you. This is another super impressive thing. They have $9.96 billion of cash after the stock buyback. But remember, $9.96 billion of cash, and their total debt is $9.43 billion. So this company is super financially stable, in my opinion, and they're just growing their net income like crazy. So here is the four most recent quarters. If we zoom out, look at this. Literally last year, it was negative. So I now understand why this stock has appreciated so much. They went from 143 all the way to $309 because they're finally focusing on giving investors real returns through stock buybacks and dividends now. They're paying an organic dividend, not to mention, I think in 5 to 10 years, they're going to be able to grow their dividend organically so much. So yeah, that's why I own 10 shares of Salesforce here in my Robinhood portfolio, and this is worth $2,415, and we're actually down 1.12%. That's because we owned this stock right before earnings, and we actually dollar cost averaged down to the stock. So now our average cost is $244, which I believe is a very, very fair price to pay. And you could even get in today 1% lower than I paid. So hashtag remember, none of this is financial advice. Don't buy or sell anything based on this video. This is all for fun